What happens if everyone stops buying US debt? If everyone stops buying US debt, the consequences would create a cascading crisis that fundamentally reshapes both the American economy and global financial system. Let me walk through you what would happen in this scenario. The first domino would be the interest rates. When demand for US Treasury bonds plummets, the government must offer higher returns to attract buyers. Currently, the US pays approximately $3 billion daily just to cover interest on existing debt. If the rate surges due to lack of demand, these costs would explode exponentially. Over the next decade, interest payments alone are projected to cost each American citizen over $40,000. Money that could fund healthcare, social security, and infrastructure would instead flow to creditors worldwide, severely constraining government spending on essential service. And without foreign buyers, the US dollar would weaken drastically since the treasury bonds are denominated in dollars. Reduced demand for bonds in turn translates to reduced demand for the currency itself. This creates vicious cycle where imports becoming more expensive, driving inflation higher, foreign creditors dumping existing US bonds in mass scale, and the dollar loses its status as a world primary reserve currency. And higher borrowing costs would trigger a severe recession as the business cut investments and consumers reduce spending. Simultaneously, the Federal Reserve would face impossible choice: either print money to buy debt, causing runaway inflation, or raise interest rate further, deepening risk.